Firstly, let's talk about what finance is. Finance is the field that oversees the handling of funds, assets, and investments. It examines how individuals, businesses, and institutions distribute resources across time, taking into account variables such as risk, time, and uncertainty. To further introduce what finance is, we will use the 5 Ws to explain it. Who? Finance is relevant to individuals, businesses, governments, and institutions, as they all engage in financial activities to manage and optimize their resources. At an individual level, finance is the compass guiding personal financial decisions, involving budgeting, saving, and investment strategies that align with life goals. For businesses, finance is the center that fuels operations, growth, and innovation, shaping critical choices in budgeting and financial structuring. Governments leverage finance to fund public services, enact monetary policies, and regulate economic parameters for the collective welfare. Financial institutions act as intermediaries, facilitating the flow of funds, managing risks, and providing crucial services that sustain economic activities. Even nonprofit organizations navigate finances, managing resources to fulfill their missions. In essence, finance serves as the common thread that weaves through the diverse complexity of economic entities, guiding decisions and resource administration to foster sustainable growth and prosperity. What? Finance covers a broad spectrum, including budgeting, taxes, insurance, fraud, passive income, investing, lending, borrowing, risk management, and much more. At its core, finance involves accurate budgeting, enabling individuals and entities to distribute resources, plan for the future, and achieve financial goals. The intricate world of taxes is also integral to finance, where understanding tax regulations and liabilities is paramount for effective financial planning. Insurance, another critical aspect, provides a safety net against unexpected risks and events, offering financial protection and stability. The study of fraud within the field of finance explores the various methods and tactics employed by malicious actors, aiming to equip individuals and organizations with the knowledge to safeguard their financial assets. Passive income strategies, a growing area of interest, explore avenues for earning money with minimal active involvement, providing financial flexibility and independence. Investing, whether in stocks, bonds, real estate, or other vehicles, is a cornerstone of finance, enabling wealth accumulation and growth over time. Lending and borrowing practices, integral to the financial ecosystem, facilitate flow and economic activities, emphasizing responsible financial management. Crucially, risk management strategies form a vital point in financial decision-making, including techniques to assess and navigate various forms of financial risk. Finance serves as a comprehensive framework that empowers individuals and entities to navigate the details of monetary matters, fostering economic stability and growth on both personal and global scales. When financial decisions are made continuously throughout life, whether planning personal budgets, investing for the future, or managing corporate finances. Although we may not notice it, we are somehow always involved in some kind of financially related activities daily. Financial decisions are an important part of our daily lives, influencing various aspects, both on a personal and professional level. On a personal level, financial planning is an essential part that requires focus and knowledge. From the early stages of adulthood, individuals start planning personal budgets to manage income, expenses, and savings. Whether it's deciding on daily spendings, allocating funds for monthly bills, or setting aside money for future goals, such as education, homeownership, or travel, financial considerations are common. Investment choices become a part of the daily financial narrative as individuals navigate the complexities of stock markets, bonds, real estate, and other investment vehicles. Even routine decisions, such as choosing between credit and debit cards, involve financial implications that impact short-term and long-term financial well-being. In the professional world, the corporation is often synchronized with financial decisions. Executives and managers continually engage in financial planning to optimize resources, manage operational expenses, and foster sustainable growth. From day-to-day financial management to strategic decisions about investments and market expansions, the business world is perpetually immersed in financial considerations. Moreover, The rising of technology has brought financial activities into the daily routines of individuals in ways that may go unnoticed. Mobile banking, online transactions, and digital wallets have seamlessly integrated financial management into our everyday lives, making financial decisions a constant backdrop to our activities. In essence, the win of finance is not confined to specific moments, but is an ongoing narrative, shaping our choices and influencing the trajectory of our personal and professional lives. Recognizing the perpetual nature of financial decisions empowers individuals to cultivate a mindful approach to finance, ensuring that each decision aligns with overarching goals and contributes to long-term financial well-being. Where finance is a global discipline, affecting economies and individuals worldwide. Financial markets, institutions, and practices vary across countries but share common principles. Financial markets, serving as dynamic hubs for buying and selling financial products, operate on a global scale. Whether it's the New York Stock Exchange, the London Stock Exchange, or the Tokyo Stock Exchange, these markets are interconnected, reflecting the interconnectedness of the global economy. Investors from one part of the world can influence markets in another, and economic events in one country can have ripple effects across continents. Financial institutions, ranging from banks and investment firms to insurance companies and regulatory bodies, function as integral components of the global financial system. Multinational banks operate across borders, facilitating international trade and capital flow. Regulatory bodies collaborate to establish common standards and frameworks that foster financial stability and cooperation. While financial practices may vary across countries due to cultural, regulatory, and economic differences, there are common principles that are the base of discipline of finance universally. Concepts such as risk management, diversification, and the time value of money are recognized and applied globally. Additionally, the principles of accounting and financial reporting, guided by international standards, contribute to transparency and comparability in financial practices worldwide. The globalization of finance is further underscored by the interconnectedness of economies through trade, investments, and financial flows. Economic events in one part of the world can trigger a domino effect, impacting markets and individuals globally. The birth of technology, particularly the rise of digital finance and fintech, has accelerated the integration of financial systems, making transactions and information dissemination instantaneous across borders. Why? The significance of finance lies in its ability to facilitate economic growth, wealth creation, and stability. It empowers individuals and organizations to make sound financial decisions, ensuring the efficient allocation of resources. Finance serves as a catalyst for economic growth. By facilitating the flow of capital, finance enables businesses to invest in expansion, innovation, and structure. Investment, in turn, generates employment, fosters productivity, and contributes to overall economic development. Financial institutions, acting as intermediaries, play a pivotal role in channeling funds from savers to those in need of funds, ensuring that resources are deployed where they can yield the highest returns. Moreover, finance is a foundation of wealth creation. Through wise investment and strategic financial planning, individuals and organizations can accumulate wealth over time. Investment vehicles such as stocks, bonds, and real estate provide avenues for growth, allowing wealth to be generated, preserved, and transferred across generations. This accumulation of wealth not only benefits individuals, but also contributes to the overall prosperity of societies. Stability is another critical aspect of the significance of finance. Effective risk management practices, a key component of financial decision-making, contribute to economic stability by reducing the impact of uncertainties. Financial institutions, through mechanisms such as regulatory oversight and lending practices, play a role in preventing systemic risks and crises. In this way, finance acts as a stabilizing force, fostering resilience in the face of economic challenges. On an individual level, finance empowers people to make sound financial decisions that align with their goals and aspirations. The efficient distribution of personal resources, guided by financial principles, enables individuals to achieve financial security and independence. Now, what is the significance of finance? The significance of finance lies in its critical role in facilitating economic activities, managing resources, and contributing to the overall well-being of individuals, businesses, and economies. The key aspects that highlight the significance of finance are economic growth, wealth creation, stability, resource allocation, empowerment, innovation and entrepreneurship, global connectivity, and social impact. So what is the role of economic growth in finance? Finance serves as a catalyst for economic development by facilitating the flow of capital. Through investments in businesses, structures, and innovation, finance contributes to increased productivity, job creation, and overall economic growth. What about wealth creation? Finance provides individuals and organizations with tools to accumulate and grow wealth. Good financial planning, investment strategies, and wealth management contribute to the creation and preservation of assets, fostering long-term financial well-being. Stability plays a huge role in the financial field. The effective management of financial resources, including risk management practices, contributes to economic stability. Financial institutions play a key role in mitigating risks and preventing systemic crises, ensuring the resilience of economies. Resource allocation. Finance enables the efficient allocation of resources by directing funds to areas where they can be most productive. Financial markets, institutions, and decision-making processes ensure that capital is allocated to projects, businesses, and investments that yield optimal returns. Empowerment is one of the most impactful key aspects. Financial literacy empowers individuals to make informed decisions about their money. Understanding financial concepts allows people to budget effectively, make strategic investments, and plan for future financial goals, fostering personal financial independence. Innovation and entrepreneurship. Finance provides the necessary capital for entrepreneurs to start and expand businesses. Access to funding encourages innovation, job creation, and the development of new products and services, contributing to economic dynamism. Global connectivity. Finance is a global discipline, connecting economies and markets worldwide. International financial systems facilitate trade, investments, and economic cooperation, fostering global economic interconnectedness. Social impact. Finance can be a force for positive social impact through philanthropy, responsible investing, and socially responsible business practices. It enables the allocation of funds to projects that address social and environmental challenges.